2014, it's almost over, which means right now is the perfect time to get your financial house in order. Tonight, we are kicking off our user's guide to year-end financial planning, starting with taxes. I'm afraid to say, but stay put because we've got some great advice for you. The clock is ticking to lower your tax bill before the new year. Here with advice, Dominick Tavella, founder and president of Diversified Private Wealth Advisors, and John Vento, president of Comprehensive Wealth Management. He is also the author of the book, Financial Independence, Getting to Point X. I want to be at point 2X. That's my goal, John. I want to start with your idea about how now is critical before the year end. What is it? Why is it so important?
Right. So many people believe that April 15th is the most important day when it comes to taxes, but in fact, it's not. It's December 31st. So most of us have only about 23 days left to make some critical decisions that could really go a long way in reducing our biggest expenditure, which is taxes.
All right, Dominick. So I think the main thing you're thinking about here is I want to reduce 2014 income so my taxes are lower. That's the name of the game. You can do that without hurting yourself. We're going to have a lightning round here. Let's start with deferring income.
Yeah, to John's point, if you wait to April 15th, it's too late. You got to do it before December 31st. So defer income. If you're a small business owner and you don't have to take that income into this year, if you get the opportunity at work to take advantage of a 401k, this is the time to do
the bonus. What about the bonus?
The bonus is a brilliant one because people are like, oh, I want to defer part of my bonus. But then if they have 5% taken out of their paycheck to go into their 401k, only 5% of the bonus gets deferred. You got to go to payroll. You got to go to HR and say, I want to defer 100% of my bonus, 25% of whatever dollar amount. But you got to be proactive about it. It won't happen automatically.
And the boss sometimes doesn't go along. So, John, if the boss doesn't go along, what's the next best thing?
Right. Well, you do have the right, if you haven't fully maxed out on your 401k plan, as Dominick said, you could still defer with your next paycheck. Unfortunately, there's probably only 1 or 2 paychecks left to do planning for 2014. So, once you get past what you could do through your employer, then funding things like your IRA account, Roth IRA account.
Bump it up, baby.
As long as you qualify, you should definitely take advantage of that.
Most people don't even fund fully, so this is a great opportunity to bump it up, make sure you're right under those limits. A lot of people talk about selling losers, Dominick. What does that mean?
Well, usually this time of year is when we want to talk to people about harvesting losses. People are like, oh, I'm down and I don't want to sell it. But the government's going to reimburse you through tax savings for getting rid of that loser. Well, you're allowed to offset your profits with your losses. 100% of your losses of your profits, 100% of your losses plus $3,000, right, John? So you're allowed to save tax. The government's going to be a partner in those losses. But a little quick one on things that are
Don't
worthless.
Screw it up.
Things that are worthless. Your accountant doesn't know they're worthless. It doesn't show up on your 1099. So you got to tell your accountant, your CPA, that stock is worthless. I bought it 10 years ago. I bought it 5 years ago. They'll write it off.
Here's my question, though, John, because I think some people get carried away with this and they sell a bunch of stuff that maybe they really wanted to have.
Right.
Should you let your tax planning drive your investment strategy?
The answer is absolutely not. So you never want to make your investment decisions solely on taxes. But with that said, you want to definitely take taxes into consideration. So as Dominick was saying, identify your losers, and if you think there's an opportunity here to sell them off, offset the gains. Now, there is a special rule in the tax code. Even if you want to hold these securities for the long run, as long as you sell them and don't buy them back within 30 days, you could still take the full benefit.
Rule.
There's
a delay there that you need to make sure you're doing. One of the things that I know a lot of people do, and a lot of people here actually do, they have these FSA accounts, these accounts that you set aside money pre-tax. They build all this money up to pay for, say, health benefits, and then they never use it, and the money goes away. What do you say, Tom?
It is a use it or lose it system. So it's great. It's pre-tax dollars that goes into your account. You're supposed to pay for your medical benefits, but you show up on December 31st, you haven't used it all, it goes away. So this is where you got to be proactive these last few days. Look at that account. Pay for your kids' medical checkups, pay for reimbursements, but use that money or it's gone.
Use it or lose it. Go get some classes, for goodness sakes. John, a lot of people out there, they don't know about the 401k catch-up. If you're over 50, what can you do?
Right. Well, if you're over 50, there's a catch-up provision, so that gives you the opportunity to contribute even more. So double-check with your payroll department and make sure you're taking advantage of that as well.
Can I just add to John's point? It doesn't happen automatically. So people are like, well, my compensation is so large, right, John? Oh, I'll get the catch up in there. No, your payroll systems cap out at $17,500 for this year. If you don't proactively go in there and say, I want to do that extra, it won't happen. You'll lose.
You have to do it that way. It's a 1-2-step process.
Correct.
It's not just a one-step
and we
process.
hear it so many times in our practice. Clients like, oh, I'm going to do it. I'm going to max out. No, you're not, because you didn't go to HR and make them do it.
Wow. Who knew taxes could be so fun? Dominick, great job. John, appreciate having you here. Great job, guys.